Welcome back to the Pro Ticker Podcast, your Wednesday morning edition covering major financial magazine headlines, everyone.
Great to be here.
Look, we know trying to stay on top of all the financial news every day, it can feel like a full-time job.
It really can. Information overload is real.
Exactly. So that's why we dig through the big names for you. CNBC's live feeds, their daily open, plus deep dives from Bloomberg, MarketWatch, Reuters, the works.
Basically trying to filter out the noise.
That's the goal. Our mission today, like always, is pretty simple. Cut through it all, pull out the really crucial stuff, and lay it out clearly for you.
Sounds good. Where should we start?
Let's kick off over in the Asia-Pacific region. CNBC's live blog painted, well, kind of a mixed picture overnight.
Yeah, definitely mixed. You had some markets up, but Japan's Nikkei 225, it actually slipped about 0.61%, closed around 37,298.
And CNBC's reporting directly linked to that dip, didn't it, to slowing Japanese exports?
Yeah, they did, yeah. Second month in a row, exports have slowed down. It really highlights how sensitive these export-heavy economies are to any shifts in global trade.
Especially with all the talk about protectionism, right? And specifically, CNBC mentioned the link to President Trump's tariffs.
Precisely. The clear example, really. Trade actions over here having a tangible impact way over there shows how connected everything is.
A stark reminder, but like you said, it wasn't all red across the board.
No, thankfully not. South Korea, for instance, had a good day according to CNBC. The Kospi jumped 0.91%, and the Kosdaq was up even more, 1.13%.
Okay, good to see some green. Australia, too.
Yep, Australia's S&P SX 200 gained about 0.5%, 0.52%, and Hong Kong's Hang Seng was up 0.62%. Mainland China's CSI 300 also saw a gain, about 0.47%.
So yeah, definitely a varied performance. Lots of different forces at play there.
For sure.
Okay, let's shift down south a bit. The CNBC live blog also caught some news from the Bank of Indonesia. They made a move on interest rates.
They did. They cut their benchmark rate down to 5.5%. Yeah. What's interesting, as CNBC pointed out, is the timing. It cut back in September 24, then again in January 25. Then they held steady for a bit at 5.75.
Right, so this is a return to easing. What were the reasons?
Well, the bank's economists, according to CNBC, flagged two main things. GDP growth in the first quarter was slower than they hoped, and the currency, the rupiah, has been weakening against the U.S. dollar.
Ah, that classic emerging market challenge, trying to boost growth without tanking the currency.
Exactly. It's a tough balancing act, especially when the dollar is strong globally.
Okay, let's bring it back to the U.S. Wall Street's recent rally seemed to hit pause a bit. That's what CNBC was reporting.
Yeah, that's right. Tuesday night, S&P 500 futures were down about 0.2%. NASDAQ 100 futures dipped the same amount, and Dow futures were off about 93 points, also around 0.2%.
And that followed the actual session on Tuesday, where things ended lower, too.
Correct. Tuesday saw the S&P 500 fall 0.39%, the NASDAQ dipped 0.38%, and the Dow lost about 115 points, or 0.27%.
And CNBC pointed out a specific shift happening during that session, right? Away from tech.
Yeah, exactly. There was a noticeable move out of tech stocks, which had really been powering the market up for the previous, 6 days?
I think it was it.
The whole tech sector dropped about 0.5%.
Yeah.
Saw names like NVIDIA, AMD, Meta, Apple, Microsoft, all down.
So maybe some profit taking or a bit of rotation into other areas.
Could be either or
Yeah.
both. Hard to say definitively from one session, but it's something to watch.
Definitely. Okay, pivoting to a longer-term tech story, Asus. Their co-CEO, S.Y. Hsu, made a pretty bold prediction on CNBC about AI PCs.
He really did. He's forecasting that AI PCs will become mainstream, like really mainstream,
Yeah.
in just the next 2 to 3 years, talking 50 to 60% of the entire PC market.
Wow, 50 to 60%. That's a huge shift, not just a niche product anymore.
Not at all. It's positioning AI as fundamental to the PC experience. And Asus seems ready to lead that charge.
How so?
Well, Esso mentioned their Q1 was strong, driven by gaming, regular PCs, and their AI server stuff.
Yeah.
He also said Asus already holds over 30% market share globally in AI PCs right now.
So they're already seeing that demand build. Maybe this AI PC wave is coming faster than some thought.
It certainly suggests that possibility, yeah.
Okay, sticking with global trade, but a different angle. LME CEO Matthew Chamberlain was on CNBC talking about tariff uncertainty, creating an interesting opportunity.
Yeah, an arbitrage opportunity, specifically around copper. because nobody knows for sure if or when potential U.S. tariffs might hit.
Right.
It creates this chance for traders. They can buy untaxed copper, maybe from Asia, ship it to the U.S., and hope it gets in before any tariffs land.
So they're basically betting on the timing, trying to buy low elsewhere and sell higher in the U.S. before a potential price jump from tariffs.
Exactly. Like Chamberlain put it, it's driven not by the presence of tariffs, but by the possibility of tariffs. Really shows how just the uncertainty itself can move markets.
Fascinating. Okay, let's zoom out to the bigger economic picture. Morgan Stanley's latest global growth forecast. CNBC reported it's pointing towards a slowdown next year.
Yeah, they see global GDP growth cooling off. They had it at a pretty strong 3.5% in Q4 2024, but they're forecasting that to drop to 2.5% for 2025.
And a big reason for that is trade friction, tariffs again.
That's a key factor they cite, yeah. A trade shock from increased tariffs impacting economies pretty broadly.
Do they have specific numbers for major economies, like the U.S.?
They do. For the U.S., they're projecting a pretty sharp slowdown, just 1.0% growth in both 2025 and 2026. That's down from the 2.5% they expect this year, 2024.
Wow, 1.0%. Why such a drop?
They point to a combination of things: tariffs, tighter immigration policies, and just a lack of strong support from fiscal or regulatory policy.
Or Europe, China.
For the euro area, they see growth staying below 1%, mostly due to weaker consumer spending and exports. And for China, they expect growth in 2025 to be shaped by about half a percentage point compared to 2024. So yeah, a generally tougher global outlook according to Morgan Stanley.
Okay. Let's switch gears to a specific company story, CATL, the big battery maker. Their shares have been doing well in Hong Kong, right? CNBC mentioned that.
Yeah, continuing to climb after their recent IPO. Seems like investors are still really bullish on the whole EV battery space. Shares were up another 4% or so this morning in Hong Kong.
And that IPO was massive, wasn't it?
Huge. CNBC reported they raised about HK $35.7 billion. That's roughly 4.6 billion US dollars. Apparently the biggest global IPO so far this year.
Shows you where the money's flowing. Energy transition tech.
Definitely.
All right, back to Japan quickly. Moody's Analytics put out a warning about Japanese manufacturers. CNBC covered this too.
Yeah, they're sounding a bit cautious. They see a potentially tough time ahead for Japan's manufacturers, citing the worsening global trade picture and that lingering threat of tariffs.
Even if the U.S. and Japan reach some kind of trade deal.
Even then, yeah. Stefan Angrick from Moody's explained to CNBC that Japan's factories are just so deeply woven into global supply chains. That makes them really vulnerable to sudden policy shifts anywhere. It's that interconnectedness, again, cuts both ways.
And this ties back to the export data we mentioned earlier, the slowdown.
Exactly. That government data showing exports grew only 2% in April, the slowest since last October, kind of backs up Moody's concerns. Imports also shrank, but less than expected. So, yeah, the trade headwinds seem real.
We also saw pretty much everywhere, CNBC, Yahoo Finance, that the S&P 500 snapped its 6-day win streak on Tuesday.
Yeah, just reinforces that pause we talked about. Even strong runs take a breather.
Now, despite all this tariff talk buzzing around, CNBC's Daily Open newsletter had an interesting take, saying AI is still the main event, really.
Yeah, that was compelling. Their point was, even with tariffs grabbing headlines lately, artificial intelligence is still the fundamental, like the crucial theme driving things under the surface.
Josh Brown from Ritholtz Wealth Management was quoted saying something similar.
Right. He basically said AI will continue to be the main catalyst, even if tariffs dominate the day-to-day trading noise sometimes.
But maybe the crazy hype around AI from last year has cooled off a bit.
That's fair. CNBC acknowledged the sort of frenzy of 2024 has maybe calmed down. But, and this is key, it doesn't mean companies aren't still pouring money into it.
They have examples, right?
Yeah, like Google's parent Alphabet launching that new high-end AI subscription, AI Ultra, for like $250 a month. Shows they're serious about monetizing it.
Definitely not cheap.
And they also mentioned Tesla, obviously still betting heavily on AI for their whole robo-taxi ambition.
Speaking of Tesla and AI, Elon Musk's CNBC interview, he talked about buying chips, didn't he?
He did.
Yeah.
Said both Tesla and his other venture, xAI, expect to keep buying tons of chips from NVIDIA and AMD. Just underscores how reliant they are on those two for the heavy-duty AI processing.
And xAI's plans sound massive.
Oh, yeah. He mentioned their current Colossus facility in Memphis has 200,000 GPUs already, and they're planning another one nearby aiming for 1 million GPUs.
1 million GPUs. The scale is just mind-boggling.
It really is. And Musk talked about bottlenecks, too.
What did he say?
His view, according to CNBC, is that right now, chip availability is the main constraint on AI development. But soon, he thinks it'll shift to getting enough electrical equipment,
Yeah.
transformers, that kind of thing,
And after that?
electricity itself. He thinks by maybe mid-2026, just generating enough power could be the limiting factor for AI companies. Really highlights the huge energy footprint of all this.
Yeah, and CNBC briefly touched on some environmental concerns already about xAI's current power usage, right? Using natural gas turbines.
Exactly. Reports surfaced about that, raising questions about air quality regulations and local permits. Something to watch.
Okay, let's shift to international trade policy again. Bloomberg reported the G7 nations are talking about potential tariffs on Chinese goods, specifically low-value, oversupplied stuff.
Yeah, the thinking seems to be strategic. There's a worry among the G7 that if the U.S. slaps tariffs on these cheap goods, China will just flood other markets with them.
Undercutting local sellers there.
Right, so it looks like a coordinated thought process, maybe trying to preempt that diversion. More multilateral than just one country acting alone.
And the U.S. is a big market for those small parcels from China.
Oh, yeah. Bloomberg's analysis showed the U.S. takes about a quarter of that market, which is worth something like $94 billion last year. And interestingly, shipments to the U.S. actually spiked recently.
Maybe importers rushing orders before potential tariffs?
Could be. And it's not just the U.S. thinking about this. The EU is apparently considering a flat fee on small packages. France, the UK, Japan, they're all looking at similar ideas too. Seems like a growing global focus on these low-value shipments.
Okay, back to tech. Google's making another big push on AI in its search product, according to MarketWatch.
Yeah, clearly feeling the heat from newer AI search competitors. They announced new features at their I/O conference, calling it AI Mode.
What's different about AI Mode?
They're billing it as their most powerful AI search. It's supposed to have better reasoning, understand different types of input, not just text, multimodal stuff. Plus, it can handle follow-up questions conversationally, but still give you links to regular web results. Trying to blend the best of both worlds, maybe.
And they seem happy with how their existing AI Overviews feature is doing.
They claim it's been a big success, actually. Led to more people searching, higher satisfaction. But MarketWatch notes, investors are still a bit nervous about what all this AI means long-term for Google's main cash cow search advertising.
Yeah, that's the trillion-dollar question, isn't it?
Pretty much.
All right, let's talk market sentiment. Jamie Dimon, JP Morgan CEO, had some warnings about complacency. MarketWatch covered this.
Yeah, he used the phrase extraordinary complacency. His point was that the market seems to be just shrugging off potentially bad news like the latest tariff worries.
He mentioned the quick recovery after the tariff news hit, and even after the Moody's U.S. credit downgrade.
Exactly. He sees that rapid bounce back as a sign that investors are maybe too comfortable, not pricing in enough risk.
And other strategists agree.
MarketWatch mentioned Jonathan Krinsky from BTA, pointing to very low put-call ratios. That basically means not many people are buying downside protection, suggesting a lot of bullishness, maybe too much.
Interesting. Okay, staying with tariffs and tech. NVIDIA's CEO, Jensen Huang, he had some strong words about U.S. export controls on AI chips going to China, reported by Reuters.
Very strong words. He basically called the export controls a failure. Said they didn't work and just cost U.S. companies like NVIDIA billions in lost sales to China.
So he prefers Trump's approach of easing some restrictions?
Seems so. He praised Trump, saying he gets that the U.S. isn't the only game in town for this tech, and blocking U.S. firms just lets competitors step in. He noted NVIDIA's own market share in China dropped significantly under the tighter rule.
And China responded too.
Yeah, Reuters mentioned China urged the U.S. to correct its wrongdoings on chip exports, calling them discriminatory and hinting at retaliation. Shows those tech tensions are still very high.
Definitely. Geopolitics also seemed to move oil prices recently. Bloomberg and Yahoo Finance reported a jump after a CNN report about Israel potentially striking Iran.
Yeah, that news caused an immediate reaction. Brent crude, WTI, both ticked up. It just shows how sensitive oil markets are to any sign of increased tension in the Middle East.
Adds that geopolitical risk premium, right?
Exactly. Robert Rennie at Westpac, quoted by Bloomberg, basically said, expect that risk premium to stay elevated as long as tensions remain high and talks are stalled.
Okay, back in the U.S., Treasury yields were ticking up a bit. CNBC and Yahoo Finance noted investors are watching the budget bill talks.
Yeah, yields on the 30-year, 10-year, 2-year all moved a bit higher. Seems like the focus is back on those budget negotiations, the deficit outlook, especially after that Moody's downgrade.
Debt ceiling debates, deficit size. Feels like a recurring theme lately.
It really is. Analysts quoted by CNBC said the final shape of the tax bill will be key for the deficit's path. And Ray Dalio even chimed in, suggesting credit ratings might actually be understating the risks around U.S. debt.
Wow. Okay, let's hop across the pond. The UK got a surprise on inflation. Both CNBC and Reuters reported it surged in April.
Yeah, a definite surprise. Annual inflation hit 3.5%, which was quite a bit higher than forecasts. Core inflation also rose to 3.8%, not what the Bank of England wanted to see.
What drove it higher?
Biggest pushes came from housing and household services, transport, and recreation culture. Clothing and footwear actually pulled it down slightly, but things like electricity, gas, water, those utility prices saw big jumps.
And the government wasn't pleased.
No. Chancellor Rachel Reeves expressed disappointment, as CNBC reported. Said cost of living pressures are still hitting families hard. This data definitely complicates things for the Bank of England's rate path.
Okay, back to U.S. trade again. Bloomberg reported the Commerce Department took a step toward potential duties on battery materials from China. Anti-subsidy duties.
That's right. They made a preliminary finding that these materials were unfairly subsidized by China. It's just a preliminary step, but it could lead to actual duties later.
What would that mean?
Well, it could make those key battery components more expensive for U.S. EV makers, which in turn might raise EV costs here, especially if, say, those EV tax credits get removed under potential Republican tax plans. And China is huge in graphite production, which the U.S. imports a lot of.
Lots of moving parts there. Okay, quickly on some specific stocks CNBC highlighted, earnings season rolls on.
Yep, keep an eye out for reports from Target, Lowe's, Baidu, Canada Goose.
Yeah.
Also, Palo Alto Networks reported recently beat on earnings and revenue, but missed slightly on gross margin. CEO talked AI security, and Amazon has a shareholder meeting coming up.
Plus, everyone's still dissecting that Elon Musk interview.
Oh, yeah. Robotaxis, chip buying, power needs. Lots for investors to chew on there.
Got it. What else briefly? G7 talking about the Russian oil price cap?
Bloomberg says likely, yeah. Discussions probably happening on whether to revise that cap, trying to limit Russian revenue without disrupting global supply too much.
And Trump and the SALT deduction back in the U.S.
Bloomberg reported Trump's urging Republicans not to let SALT or safety net cuts hold up the tax bill, but it sounds like there are still big divisions within the party on those issues.
Could be tough to pass.
Okay. And M&S in the U.K. hit by a cyber attack. Big cost.
Yeah, CNBC reported estimates around $300 million, about $403 million U.S., in lost operating profit from that attack. Shows the huge financial risk from cyber threats.
Meanwhile, the ECB seems confident the Fed will provide dollars if needed.
Reuters reported ECB Vice President de Guindos expressed confidence in those Fed swap lines being available during stress. That's important for global market stability.
And the British pound jumped after that UK inflation number?
Yeah, typical reaction. CNBC noted sterling gained against the dollar. Likely on speculation, the higher inflation might mean the Bank of England keeps rates higher for longer.
European markets opened lower this morning. Generally, yes. CNBC showed the stock 600, FTSE, CAC, DAX, all starting in the red, maybe reacting to the U.S. pullback and that UK inflation data.
But Cisco CEO sounded positive on Europe, especially regarding AI.
He did, according to CNBC. Chuck Robbins sees the European market improving thanks to AI and regulations fostering innovation. They're even putting an AI hub in Paris, though he did mention the uncertainty from Trump's tariffs as a potential issue.
Okay, and lastly, Japan's farm minister resigned.
Yes, CNBC reported Taku Ito stepped down after public anger over comments he apparently made about getting free rice while prices are soaring. Shows how sensitive food prices can be politically.
Wow. Okay, so wrapping up this deep dive, it's clear just how tangled and complex the global financial picture is right now.
Absolutely. So many moving pieces. And for you, our listener, it's really worth thinking about how all these different threads, tariffs, inflation, AI breakthroughs, geopolitical hotspots, how they might connect and influence things going forward.
We'll see you all tomorrow morning with new headlines from major financial magazines.